Watch video 31 on Chapter 7, Net Asset Value, Total Expense Ratio and Pricing of Units from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What must asset management companies, AMCs, do with expenses incurred by mutual fund schemes? A. Hide them. B. Clearly identify and appropriate them. C. Deduct from investors' profits. D. Ignore them. Answer: B. Clearly identify and appropriate them. 2. What type of fees are charged to the scheme by the AMC? A. Transaction fees. B. Investment and advisory fees. C. Marketing fees. D. Custodian fees. Answer: B. Investment and advisory fees. 3. Which document discloses the details of investment and advisory fees? A. Annual report. B. Prospectus. C. Scheme information document. D. Contract notes. Answer: C. Scheme information document. 4. Which of the following is not listed as a recurring expense for mutual fund schemes? A. Audit fees. B. Brokerage and transaction cost. C. Investor communication costs. D. Profit sharing bonus. Answer: D. Profit sharing bonus. 5. What type of fee is incurred specifically by gold exchange traded funds? A. Storage and handling of gold. B. Audit fees. C. Insurance premiums. D. Trustee fees. Answer: A. Storage and handling of gold. 6. Which mutual fund scheme has recurring expenses for the storage and handling of silver? A. Equity scheme. B. Index fund. C. Silver exchange traded fund. D. Bond fund. Answer: C. Silver exchange traded fund. 7. What type of expense applies to real estate mutual fund schemes? A. Custodian fees. B. Maintenance costs of real estate assets. C. Brokerage fees. D. Dividend costs. Answer: B. Maintenance costs of real estate assets. 8. What is the maximum total expense ratio for a fund of funds scheme investing in liquid schemes or ETFs? A. 1%. B. 2%. C. 1.25%. D. 2.25%. Answer: A. 1%. 9. What is the maximum total expense ratio for an equity-oriented fund of funds scheme? A. 1.5%. B. 1.75%. C. 2%. D. 2.25%. Answer: D. 2.25%. 10. Which type of fund has a maximum total expense ratio of 1% of daily net assets? A. Open-ended equity fund. B. Index fund or exchange traded fund. C. Bond fund. D. Real estate fund. Answer: B. Index fund or exchange traded fund. 11. What is the total expense ratio limit for equity-oriented open-ended schemes for assets up to 500 rupees crore? A. 1.5%. B. 2%. C. 2.25%. D. 1.25%. Answer: C. 2.25%. 12. What is the total expense ratio limit for other than equity-oriented open-ended schemes for assets up to 500 rupees crore? A. 2%. B. 1.5%. C. 1.75%. D. 2.25%. Answer: A. 2%. 13. For assets above 5,000 rupees crore, what is the expense ratio reduction rate for equity-oriented schemes? A. 0.01%. B. 0.03%. C. 0.05%. D. 0.1%. Answer: C. 0.05%. 14. What is the total expense ratio limit for close-ended equity-oriented schemes? A. 1%. B. 1.5%. C. 1.25%. D. 2%. Answer, C. 1.25%. 15. What is the maximum brokerage and transaction cost for cash market transactions? A. 0.1%. B. 0.12%. C. 0.05%. D. 0.15%. Answer, B. 0.12%. 16. How much can a mutual fund charge as additional expense for inflows from beyond the top 30 cities? A. Up to 0.1%. B. Up to 0.2%. C. Up to 0.3%. D. Up to 0.5%. Answer, C. Up to 0.3%. 17. What happens if inflows from beyond the top 30 cities are redeemed within a year? A. No impact. B. The additional expense is credited back to the scheme. C. A penalty is imposed. D. The inflows are reinvested. Answer, B. The additional expense is credited back to the scheme. 18. What is the additional expense limit for mutual fund schemes where exit load is not levied? A. 0.3%. B. 0.15%. C. 0.1%. D. 0.05%. Answer, D. 0.05%. 19. What do AMCs need to prominently disclose on their website daily? A. NAV. B. Total expense ratio, TER. C. Profit margin. D. Dividend payouts. Answer, B. Total expense ratio, TER. 20. What type of bonds do AT1 and AT2 refer to? A. Convertible bonds. B. Perpetual bonds. C. Government bonds. D. Corporate bonds. Answer, B. Perpetual bonds. 21. What is the maximum exposure a mutual fund can have to bonds issued by a single issuer? A. 15%. B. 5%. C. 10%. D. 20%. Answer, C. 10%. 22. What is the deemed residual maturity for AT1 bonds till March 31, 2022? A. 5 years. B. 10 years. C. 20 years. D. 30 years. Answer, B. 10 years. 23. From April 1, 2023 onwards, what is the residual maturity considered for AT1 bonds? A. 10 years. B. 20 years. C. 30 years. D. 100 years. Answer, D. 100 years. 24. What is the residual maturity for AT2 bonds after March 31, 2023? A. 10 years. B. 20 years. C. 30 years. D. Contractual maturity. Answer, D. Contractual maturity. 25. Which type of mutual fund scheme cannot invest in perpetual bonds? A. Close-ended debt schemes. B. Open-ended equity schemes. C. Index funds. D. Fund of funds. Answer, A. Close-ended debt schemes. 26. What is considered when an issuer does not exercise the call option on AT1 bonds? A. NAV remains unaffected. B. Maturity is extended to 100 years. C. The bond is redeemed. D. The bond converts to equity. Answer, B. Maturity is extended to 100 years. 27. What should be reflected in the valuation if the call option is not exercised due to the issuer's financial stress? A. Increased maturity. B. Decrease in the bond's valuation. C. No change in valuation. D. Profitability of the scheme. Answer, B. Decrease in the bond's valuation. 28. What is the Macaulay duration based on for at-one bonds? A. Contractual maturity. B. Residual maturity. C. Issuer's financial status. D. NAV. Answer, B. Residual maturity. 29. For which type of bonds is the valuation considered as 100 years maturity from the date of issue? A. At-two bonds. B. Government bonds. C. At-one bonds. D. Corporate bonds. Answer, C. At-one bonds. 30. What happens to excess expenditure beyond the prescribed term limit? A. Investors bear the cost. B. The AMC bears the cost. C. Trustees bear the cost. D. The cost is split between investors and the AMC. Answer, B. The AMC bears the cost.